I backtested over 700 million trades across 81 different candlestick patterns in the stock, futures, and Forex markets so I could identify the very best candlestick patterns for me and my algorithms to trade. You might say, Leo, how does this help me? Well, guess what? I'm going to share with you the result, and I've also built an interactive tool that you can use to identify the very best candlestick patterns for your market and your trading style. But if we haven't met yet, my name's Leo Smigel. I'm an algorithmic trader who loves to study the market and trade based on data, and that's what we're going to do here today. Here's how we're going to roll this out. First, we're going to cover what are candlestick charts. Then we're going to cover what are candlestick patterns. Then we're going to see a few examples so that you get comfortable with identifying the patterns. And at that point, we're going to learn the 6 different setup types that you can do on these candlestick patterns. We're going to cover the interactive tool that I built so that you can identify the very best candlestick patterns for your market, whether it's in an uptrend, downtrend, or your scalper, a swing trader, etc. And then finally, we'll wrap up by how do you actually find these things using your charting software. So if this sounds interesting to you, hit the like, because quite frankly, these data-backed videos do take a lot of time. And if this is something that you're interested in, I want to hear about it. Let's get to it. Candlestick charts are just a tool traders use to understand past market moves and to profit from future price action. Candlestick charts are named as such because when you group prices into periods, they form a candle-like shape. What you're seeing in front of you is a chart of the S&P 500 index on the minute time frame. Each bar is 1 minute. We could easily change this to make each bar 5 minutes, 1 hour, 15 minutes, day, week, month. It doesn't really matter. All we're doing is taking our open, high, low, and close prices and grouping into periods, making them look like candles so we can visualize them. So let's keep this on the 1 minute chart so we can see some live price action and try to understand exactly what I mean by open, high, low, close. A green candle means the price during that period moved higher. We see these minute periods or bars. The first price, which is the opening, is right here, and the last price is the close, which is right here. Again, open here, closed here, open here, closed here. Those are green candles, also known as bullish candles. Bearish candles means that prices moved lower during the period. It opened here, closed here, open here, closed here, open here, closed here, open here, closed here. Now, the only other thing that we need to understand are wicks. Wicks show you the high and low during the period. So if we come to this candle right here, this was the high of that candle, and here's the low of this candle. And we can see, looking at this live candle right now, we don't know if it's going to close bullish or bearish. It looks like it's going to be green, so it'll be bullish, but price opened here. It's trying to push higher, but it actually pushed all the way down here. And now we see here's the high, it's moving back down. So here's the high during that period, and it closed right here. So now there's the next minute period. It opens here, it pushed down a tiny bit. You know, the bulls and bears are fighting a little bit, and now we'll see if price pushes up. It pushes past the previous candle's high. It keeps moving up, likely going to close bullish. But essentially, that's the idea. You only need to know the open, high, low, and close. And if it closes bullishly, it means that the open was lower than the close, or price moved up during that period. And if it's bearish, means that the price moved down during the period. It opened higher than the close. But always remember what you're looking at. You're not just looking at red and green bars. What you're really looking at is market psychology, which is just human psychology, and the forces of supply and demand mapped visually so that you can make sense of it. And the sooner that you understand that you're looking at the psychology of people and supply and demand, the sooner this stuff can make sense and you can shift the probabilities in your favor. With an understanding of what candlestick charts are, now let's turn our focus to candlestick patterns. Candlestick patterns are a technical trading tool that simply means it's based on price and not fundamentals, used for centuries to help predict price movements. Each candlestick pattern has a distinct name and a traditional trading strategy. But what you'll find out is that these traditional trading strategies that are passed from generation to generation and that most traders use today are typically wrong, and at best you'll likely break even, and at worst you'll lose money, because they all depend on which market you're trading. But a picture is worth 1,000 words. So let's take a look at our very first candlestick pattern, the bullish closing Marubozu. It is a single bar pattern with a long bullish or white body with a closed price that's very close to the high. And traders traditionally expect this pattern to continue the bullish trend. And in fact, in the stock market, they're correct. Minus frictions, which are fees, slippage, etc., and this goes for all of the backtested results, traders on average will make 28 cents per dollar risked. But there's a better way to trade this. In fact, it's better to go in the opposite direction and expect a quick bearish move. These data-driven traders earn 68 cents for every dollar risked. Now, granted, the magnitude isn't as high because it's a shorter bounce, but that's the idea. And if you think about this logically, after a big move, savvy traders are going to want to book some of that profit. And that's what I mean about thinking about this psychology. It's not just a pattern, right? This is supply and demand and people's emotions. And these patterns simply represent how people act and think in the markets. Now let's look at our second candlestick pattern, the 3 white soldiers. It's a 3-bar pattern, and it's said that the 3 white soldiers are 3 white knights fighting against the darkness. You'll notice in this pattern, there's 2 tick marks sloping down. That means that this pattern is only valid in a downtrend. That's why the analogy says that they're fighting against the darkness, which is really just the downtrend. The 3 white soldiers requires 3 bullish, medium to large candlesticks with consecutively higher closes of relatively similar size. Each candle must open within or near the previous candle's real body and close at or near the high of the day. And as mentioned previously, it occurs in a downtrend. It's essential to be able to take these picture-perfect candlestick identification images and translate that into your charts. We see here the Agilicis July 8th, 2013 daily chart. And on this chart, we notice that price is in a downtrend. And there's lots of different ways to determine a downtrend, but for our intents and purposes, if the last price of the candlestick pattern is below the 50-day average, I consider that a downtrend. If it's above the 50-day average, I consider the pattern to be in an uptrend. So with the first requirement identified, the price is in a downtrend, we now need to see the 3 bullish medium to large candles that are consecutively closing higher, with each candle opening within or near the prior candle's real body. And the real body is just the portion of the candle between the open and close, excluding the wicks. So with these requirements fulfilled, this is indeed a 3 white soldiers candlestick pattern. And we do see that price does move up a little bit and then chops around, but that's not the best way to analyze these things. I've done all the back testing for you, and I even created a tool that you can use freely to determine the best possible candlestick setups for your trading strategy. So in this instance, we're looking at the white soldiers candlestick pattern. We can see that for most markets, it looks like the best strategy is a bullish mean reversion. If you're a stock trader, you can go up here, select stock, and that will filter to only show you the back test results for the stock market setups. And you can see that indeed a bullish reversal, which is the traditional strategy using a risk reward ratio of 5-to-1, means for every dollar of risk you take 5 reward, seems to have the best payout. You might wonder why the optimal strategy seems to be duplicated, but if you dig in, which you can actually click on this stuff, you can see the setup or the entry criteria is a little bit different. But in order to understand all these setups and entry criteria and to be able to utilize this tool so you're a data-driven trader, you need to understand all of the various trading setups. So let's dig into that now. Prices can either go up, down, or move sideways. That's it. And when in context of the trend, the price movements can either continue the trend or reverse it. This leads us to the following potential trade setups. First, we'll cover continuations, which simply continue the trend. We've got a bullish continuation, which is a bull move in an uptrend. We have a bearish continuation, which is a bear move in a downtrend. And then we can reverse the trend. A bullish reversal is a bull move in a downtrend. Again, we're reversing the trend. And a bearish reversal is a bearish move in an uptrend. There's 2 more we'll cover, but we'll cover those later because I don't want to confuse you. So let's go ahead and look at specific examples. Let's start with the upside Tezuki gap. It is a bullish continuation. That means the pattern only occurs in an uptrend and the pattern expects the uptrend to continue. It requires a first candlestick. It can be bearish or bullish. That's why you see both black and white here. The second candle gaps up, meaning the open is above the close and it creates this gap or window. The second candle is bullish, and then the third candle opens within the real body of the second candle and closes within the gap, which means it's obviously bearish. And as mentioned previously, the bull momentum is expected to continue. The downside Tezuki gap is the mirror opposite of its bullish brother that we just looked at. In this case, it's a bearish continuation. So the pattern occurs in a downtrend and price is expected to continue lower. Now let's look at when price reverses, only this time we're going to use charting software to get us more comfortable looking at candlestick charts. We see here that there is a 3 white soldiers candlestick pattern that occurred on the Autodesk daily chart on October 6, 2011. Price is in a downtrend as it's underneath the 50-day moving average. That's what we're using as a proxy for the downtrend. And price does indeed reverse and move to the upside, and that is a bullish reversal. Now let's take a look at a candlestick pattern that expects a move in the opposite direction. In this case, it is a bearish reversal. Again, price is in an uptrend and price is expected to fall to the downside. The specific pattern right here is a 3 black crows pattern occurring on the NetUp daily chart on Friday, December 26, 2014. The 3 black crows signifies darkness or a bearish move. Oddly enough, it's actually a 4-bar pattern. The first candle is bullish. The second through fourth candles are consecutively declining bearish candles with little to no wicks. The second candle must close under the prior white candle's high. And the third and fourth candles must open within the prior candle's real body. And again, it must occur in an uptrend. At this point, you're probably like, oh my goodness, how am I going to remember this stuff? Don't worry, your scanning software can help you identify it. And I'll show you how to do that later. But the real key point is to understand the difference between the bullish and bearish reversals and continuations. So that way you can use the tool that I built to identify the very best candlestick patterns for your market and your trading style according to history. Let's take a look at the tool that I built once again. What do you see here? We just saw the 3 black crows candlestick pattern. We understand that traditionally traders expect bearish reversal, and it does seem like that is the case. You'll make 2 cents for every dollar risk. But when you look up here, we see that really what a 3 black crows indicates is that a lot of volatility is incoming. But if you're going to want to take advantage of these volatility trades, which I'm coining them bearish mean reversion or bullish mean reversion trades, you have to understand what that looks like. Trading a bearish mean reversion strategy is very easy. All we need to do is identify the pattern, which here is the 3 black crows. We've seen that a few times. We identify the high of the pattern, which occurs on the first day, and we enter short when price moves up above and then back below the high. And in this case, we would have made some profit here depending upon your risk levels, or you would have been in a longer trade and we see a pretty violent move to the downside. Again, you can use the calculator to determine how you want to trade and what fits your personality. Let's take a look at the bullish side of things. In the bullish mean reversion strategy, what we want to do is we want to identify the low of the pattern. In this case, it's the 3 white soldiers. We identify the low which occurred on the first day, and then we want to enter long when price goes below the low and then back above it. So in this case, it occurs on this bar here. Price moves down below the low and then moves up. So we'd be in a long entry, and price then moves up and to the right, leading to a profitable trade. Now that you understand bullish and bearish continuations, reversals, and mean reversion setups, now it's time for you to start acting like a casino. And what do I mean by that? A casino will never go in on a bet where it doesn't have an edge. And what that means is anytime a casino risks $1, it expects to make money. It doesn't matter how good your risk management skills are. If you have a negative edge, you'll eventually lose all your money. And the reason why I'm talking about edge, and I've talked about edge previously, is that you have to have one. The good news is that if you believe that history repeats itself or even rhymes, you can use this tool that I've created to identify the best candlestick patterns for your market. Take a look at this. We see the Dow Jones Industrial Index versus the Invesco DB Commodity Index. What's happening here? There's an upward bias to the stock market and not so much with the commodity market. So obviously, candlestick patterns or whatever patterns you're trading are going to be different and work differently in different markets. Be very careful of anyone that ever says, oh yeah, this will work in all markets, because they might be misinformed. You should say, show me the data. Well, here, I'm going to show you the data. You can either use this tool here or scroll down, and I've identified the very best candlestick patterns for each market. You can then click on them to understand how each one works, where's your entry criteria, and marry that to your trading strategy. Obviously, if you're a swing trader, you're going to want to trade different patterns than a scalper. But the point is, all of this data is here for you to examine. And if you have any questions on any of it, feel free to leave them in the comments below. And now that you're empowered to identify the very best patterns for your market, the final question is, how do you identify these things quickly and painlessly? And this might be the easiest part of the entire video. Let's head back to Tradingview. We'll go up to indicators. And remember, we've been looking at the 3 black crows. We'll go to technicals and then patterns. We'll scroll down to candlestick patterns. And now we're looking for 3 black crows, which is bearish. And now you'll see when we close this, it does indeed highlight the 3 black crows candlestick pattern. And you can do this for any of the candlestick patterns. As you can see, there's a lot of them. And the good news is that I have backtest results for pretty much all of the ones that you'll be interested in trading. Isn't data awesome? If you want to up your trading game even more, check out this playlist here. And if you like this video and you want more data-backed content, please hit the like and the subscribe, and I'll see you in the next one. Thanks. Bye.